Morning, everybody. Welcome to another edition of the FundQuest webinar series. Today, we'll be discussing the topic, understanding SME lending, why you don't get loans. With me on this call today is Mrs. Obashola Dele-Oni. She is the investment manager of GroFin. Thank you very much, Mrs. Dele-Oni, for joining us today.
Good morning, Kayode. Thank you for having me. I'm happy to be here today.
Also with me on this call is Mr. Olakunle Ayodeji, the head of our commercial credit arm of FundQuest Financial Services Limited. Thank you very much, Mr. Ayodeji, for being with us.
Good morning, Kayode. Thank you for having me. It's great to be here.
And my own name is Olukayode Akintumile. I will be the anchor, your moderator, the navigator for this event today. Before we proceed and begin in full, I want to thank our attendees, the ones that are currently on this call. Thank you very much for taking out time today to be with us for this particular session. We hope you would enjoy it. We believe you would actually enjoy it because it promises to be an very enlightening and entertaining session. Before we start, I have with me also on this call, Mr. Abiodun Akinjayeju, the Managing Director and CEO of FundQuest Financial Services Limited. Mr. Akinjayeju, good morning. Thank you for being with us here.
Good morning. Great to be here. Thanks for our invitees that are able to join us.
Okay, we would like to see the faces of our panelists anyway. I believe our attendees would also love to see your faces, your beautiful faces this morning. It seems like everybody is being shy on a Friday morning, and Friday is supposed to be the party day, obviously. So here are the beautiful faces at the end of the day. Now, before we start up fully, I would like my MD to say a few words, welcoming the attendees and putting us in place for beginning this show and this on a perfect note. You have the microphone.
Yeah, thank you, Kayode, and welcome everybody once again. This issue of MSME is a critical thing at the junction of our national life, particularly in this country, with the high level of unemployment and low level of business activity that is going on within the economy. The PricewaterhouseCoopers in their report in year 2020 came up with a very damning report that shows the great contribution of MSME to our GDP, constituting almost over 50% of our GDP. Meanwhile, the attention that we as a country are paying to MSME has been so abysmal. In all indices of evaluation, the MSME have not fared well, particularly in terms of government fiscal and monetary support to that great contributor to our GDP. And therefore, this webinar that we are having today is to showcase or highlight some of those areas that the nation, particularly the economic managers, can focus attention to as supporting the MSME so that they can contribute much more to the GDP of the country and also enhance the employment generation within the polity. In terms of employment, the PwC report suggested to us that over 70% of the workforce is populated by the MSME. So what it then means is that those people that we call the MSME in the informal sector and what we could call unreachable or difficult to reach segment of the economy contributing 70% of our employment. So as a result, it's a critical area for us to pay attention to in our national life. More
since we've lost Mr. Akinjayeju, your network isn't exactly very good. Okay. Mr. Akinjayi,
Hello.
Mr.
Can you hear
Akinjayi,
me now?
yes, we can hear you
Yeah,
now.
I'm here.
Yes,
Okay, great.
you said a lot of things
Yes,
that.
yeah, yes, I was trying to set up the tone about the environment in which the MSME operates. And the result, you try to enlighten us and focus attention to how best this MSME can approach the financial institutions to obtain needed credit and at the same time build their capacity to enable them to contribute more to the GDP. I welcome everybody to this webinar, and I believe that we will have so much from it. Hello, can you hear me? Thank you.
Thank you very much, Mr. Akinjayi. Although towards the end there, it seems like we lost more than got what you were saying. But thank you very much. I believe the message is being passed. So basically, today we are going to be talking about loans. One word. It's as simple as that. We're going to be talking about loans. Mr. Akinjayi has told us that when you look at the report of Nigeria's GDP, you find out that over 50% of what makes up the GDP for this country is coming from the MSME sector. And yet we keep on looking at oil, we keep on looking at sectors that really do not contribute much to the GDP. And he also mentioned that more than 70% of our employment in this country today comes from the MSME sector. That's a lot. A country that has its MSME sector thriving is a rich country. And one thing that is pivotal to the survival of most small and medium scale enterprises is, sorry about that, is credit. The accessibility to credit, the willingness of finance houses to provide these credits to the SME sector, that's very, very pivotal to their existence. To discuss these issues with us and more, we have Mrs. Obashola Dele-Oni. Before I give the mic to her, anyway, I will be putting up a poll shortly. The poll basically says two things. One, what sector do you fall in? Are you a salary earner or are you a business owner? Everybody needs loans at the end of the day, and I know we are touchlighting the flashlights today on the SMEs, but even salary earners do need loans. What we're trying to find out today is what exactly makes it difficult for us to access loans. And I'll be putting up that poll shortly just as she begins, and we'll be speaking to the results of the poll later during the program. So over to you, Mrs. Obashola Dele-Oni. Do have the floor. I believe you should be able to share your screen if you do wish to do that.
All right, thank you very much, Kayode. I'm happy to be here. FundQuest has become like a family, a home to me, and I'm happy to be sharing with attendees today. We're talking about loan, and it's just one word, loan, or credit, as you have put it. And Mr. Akinjayi has said quite a lot. The SME sector has contributed immensely, or is still contributing to the development of every economy, especially the developing economy, but yet it's been very, very difficult to access credit and loans. So what we'll be talking about, what I've been mandated to talk about is why don't we get loans today? So I'll start sharing my screen right now. Okay. Kayode, I believe you can see my screen.
Okay. Yes, but now we can see your screen. Yes, we can see.
All right, thank you.
Yes.
So what?
Right. Thank you.
Thank you, Mr. Akinjayi. So what are SMEs really? What's the definition of SMEs? Now, before I go on to my screen, I'll just like to say that, SMEs are small, medium enterprises. And if we had M to the front, we have the micro, small, medium enterprises. There are businesses that operate within, that maintain a certain revenue, assets, and a number of employees. They have a certain threshold. You don't go beyond a certain threshold. If you're a micro businesses, that means you have employees less than 10. If you're a small, medium enterprise, your employees are, you don't have employees above 11 to about 250. Every country have their own definition of small and medium enterprise. in Nigeria, and if we try to go to the BOI website, we see the difference between how we define SMEs. If your employees are less than 10, you are a micro business. But if you are within the threshold of 10 and 250, then you are a small, medium enterprise. If your asset is less than 5, by assets, I mean what the company owns, then you are, if less than 5 million naira, you are a micro business. But if it's between 100 and 500 million, then you are a small, medium enterprise. Now, for SMEs, they are very peculiar also. Though we regard them as firms whose financial requirements are too high for a microfinance, but are too old and also too small. Sorry about that. Trying to. Okay. Now, for SMEs are too big for microfinance banks and are too small for corporate banking models. So what do? They try to approach conventional form of financial institutions. We have the banks, we have financial institutions, we have microfinance institutions, and recently we have the fintechs that are there to service loans. So we have SMEs have all these at their disposal, but yet they are still unable to access funding. Now, what could be the problem? There are so many things we look at when we are assessing loans, and those things are what I will look at today. Now, in my definition, Mr. Akinjaitu said quite a lot in his intro. Yes, we represent, they are largely very important to the economy, but they lack access to these financial products. And these are the things that we will look at today. So what is it that we can, so why can we not access those bank loans? Why is it difficult for small businesses to access loans, to go to financial institutions? And yet we see companies like Dangote, companies like BUA, big companies that are accessing loans. What do they have that is different from what the SME has? Now we're going to try and break it down to the best, in the easiest way we can break it down. And we'll try and trash it out. So I'm sure that at the end of this session, I'll be able to answer questions and clarify gray areas. Most employees, how do we start businesses? Most people access loans from family, from friends. And for SMEs recently, a lot of grants, people are beginning to access grants. But we all know that you cannot grow a business with organic funds. You need credit, you need loans. Even grants, there's a level of criteria that comes with grants. You can get grants, but how often do you want to get grants? You need to keep expanding your business. And for you to keep getting that credit, expansion has to. You need to grow your business to get credit, and you need credit to grow your business. So it works hand in hand. So I'll just move on to why we cannot access those. The first thing is lack of quality business plan. How many of us have business plans? You see, I get a lot of inquiries every day. And I ask myself, and I ask them, when is inquiry working? I ask them, what is your business plan? They said, oh, I just want to find out. I just want to know what's going on. I just want to see what you have to offer me. But you see, as a credit manager, as an investment manager, or a banker, you meet a lot of persons every day, a lot of people every day. The first thing you want to see is their business plan. And I expect that when you want to start a business, you need to have a plan, a strategy, a budget. You need to know what your financials are. You need to know what you want to do. And all this, you can't just keep it in your brain. You need to articulate it. If your business is not well presented or articulated to any financial institutions, it will be difficult for them to actually help you or appreciate what you're talking about. I can sit with you every day. I can understand you. I can listen to you. But the moment you walk out that door, because somebody else is going to walk in afterwards, I may not remember what you've told me. I may remember your product, but it will be difficult for me to actually maintain that level of relationship with you without me having your business plan. Do not start for whether you're a large company, a small business, a micro business, you must be able to put pen to paper and articulate your business for that funder. Nobody wants to just be sitting down. I don't want to sit down and talk every day, but I want to see something. So if we don't have a business plan right now, I would advise If you can't do it yourself, there are consultants that do it. I'm sure FundQuest also have that product. You need to have a business plan, not just a business plan, something well articulated. What does your business plan have? What will it say? It talks about your product. It talks about your services. It talks about your process. It talks about the market. It talks about your competition, your unique selling points. These are the things that we're going to see in the business plan. And off the top of anybody's head, when I read a business plan, you can make a decision, is the first point of call. I don't have to even see the entrepreneur before I appreciate that business. But when you send a business plan to any institution, when they read that business plan and is interested, they contact you. Especially when they see that, oh, this is well articulated, the financials are good, everything is working well, they contact you. That is the first point of call. But when you walk in and say, hey, I need 1 million naira, and the person keeps asking you the question, you keep talking and talking and talking. No finance manager wants to spend 3 hours talking about your business without having something to show for it. So the first thing is you need to have a business plan. Whether you are a startup business, whether you are a growing business, whether you are a multinational, you need a business plan. And that is it. You can't meet a financial institution without a business plan. And it also helps you to get to that position of getting international funding, getting grants. They always want to see what you have written and what you have done. Besides the business plan what goes hand in hand with the business plan is your financials. If you're a startup, you need to have a form of projection to work with. You know your business, you know what you want to do, you know the budgets, you know where you're going to. You need to have these projections. And if you're an existing product, an existing business, you need to have your cash flow, your financials. You know, we see a lot of small businesses, they don't have their financials handy. You know, how can you, and you ask yourself, I'm a manager or you are a CEO, how do you meet with your clients, with your staff, weekly meeting? One of the fundamental things you need to work with your management is your financials. You use this to plan for the month, for the week, or for the day. You can't do a business without having your budget, without having a consistent cash flow, without having what you work with. Then what informs the decision you make are your expenses, are your turnover budget, are your targets. How do you give your staff targets? If you do not have financials, you cannot approach a financial institution. Now, we see a lot of institutions, a lot of entrepreneurs that come to me. Well, I've met that a lot. And especially for micro or some small businesses, they maintain a level of, because they don't want to pay tax, we're still going to get that. You know, a lot of their sales income is going into personal bank accounts. This is wrong. You need to be able to separate yourself from your business. If you have a business and you are still maintaining personal accounts, you cannot get finances. Yes, you can get finance you can get probably personal loans from micro businesses or fintechs. You know, fintechs, they have these things. I'm sure, you know, they have these things where you can just go online and access all those kinds of money. But if you want a serious lender, someone that will support your business, help you grow, you need to maintain your books, maintain a corporate bank account, ensure all monies, all trades. If you make 100 naira, that 100 naira has to be paid into your bank account. If you make 50 naira, it has to be paid into your bank account. What we've experienced over the years is we see a lot of entrepreneurs. They tell me, you know, I see your profits and loss statement, I see 100 million naira, and your bank statement history over the last 6 months is just 25 million naira. And the question is, what went wrong? Oh, you say, oh, some money is because it's small. We keep them in the book. It's too small to be paid into the bank. You know, there's no, how will I say it? You can't marry both together. That is a red flag. You know, it calls for diversion. You can either be diverting money, or your staff may start stealing. Then that means there's no structure in that business. Every money must go into your bank account. If you do not do that, then if you don't have that consistent cash flow, you can't do anything. Then you must prepare your profit and loss account, your balance sheet, your statement of cash flow every month. If you don't have that, you need to have an accountant. If you have an entrepreneur, a business that don't have an accountant, even if you can't afford to pay an accountant, get an account clerk or get a visiting accountant who comes to your company every month. You need to have that. One of the things we encourage in GroFin is you must have an accountant or an accounting software designed to meet the needs of your product line. It is very, very important. You need this. Your business plan and your financial and your cash flow and financial is what you need, is what you go hand in hand to that funder who will look at it, marry both with the new product, with your expansion plan or your growth plan, and look at, oh yes, this business is doing well. So when you see that, you know that this is a serious entrepreneur. Without that, it may be very, very difficult to get a loan from that serious lender who is ready to partner with you and to help you grow your business. So if we have entrepreneurs or businesses that don't have business plans or cash flow, I would advise, please get this on board and start putting together your financials. Get an accounting clerk and get software. I know that there are lots of cheap software out there right now that we can adopt. And even Sage, I'm not trying to market them. Sage, they're doing products to suit a lot of small businesses right now. So it's very good for us to investigate that as well. Going forward, I'd like to move on inadequate collateral. Now, this has been a lot of issues. This has caused a lot of issues to, and a lot of businessmen and women say, oh, they don't want to help businesses. They're only giving big businesses money. But the truth is, we are managing other people's money. A bank is managing other people's money. FundQuest is managing other people's money. GroFin is a fund manager. As soon as this money leaves your office, it's at a risk of not coming back. So how would you safeguard that money from coming back? So I need a bit of skin in the deal or something from you as an entrepreneur. Every financial institution needs that, except you have a form of issue with them. Now, remember that we have banks, we have other financial institutions, we have microfinance. Before you can access funding from a bank, you need to have probably a cash reserve or have a history with them. The same thing for microfinance banks. They won't give you funding if you've not dealt with them for a while or if you don't have a certain level of cash with them. So if you're going to fund managers who do not know you until you submit your business plan, you need to be able to give something to them to say, I trust that my business will be successful. I trust that I'm going to pay back this money. So take this, when I pay back this money, the money is going to come back. I'm going to give you this. When I give you back, you need to be able to trust them to give you. If you have issues giving collateral, it raises a red flag. It means that either way, are you thinking that do you want to pay? They will keep saying, are you saying that you want to walk away with the funds? But if you trust them enough to give you that collateral, it means that you believe in the business you are doing. Collateral is key because also there are good entrepreneurs. You know, I'm a literature person. I like to read as well. And you know, Wale Soyinka, we all know Wale Soyinka said in one of his books, I think it was The Trials of Nigeria. He said there are eggs and there are eggs. You know, we have entrepreneurs and we have entrepreneurs. They're the good, they're the bad, and they're ugly. We have some very good entrepreneurs who are committed, who are willing, and there are some who are not willing. We've seen a lot of entrepreneurs who walk in smiling, cap in hand, and the moment you give them the loan, they don't look back. There are lots of cases that we've had to go through. The only way you can ensure that an entrepreneur will look back if anything goes wrong is if he has a collateral with you. And that is why there has to be collateral. Now, what do we advise for entrepreneurs that don't have properties? The thing is, instead of buying that status car, instead of buying that property, why not invest it in machineries? Why not invest it to build your business? Do something, tie it down to something that's going to link to the business. And in the name of the business, you know, I said something earlier, you need to be able to separate yourself from your business. The moment it's called a company, it's an institution of its own, it has its own entity. So you need to be able to separate yourself. Buy that company car in the name of the company. Don't buy it. I won't have Shola Limited and buy the car in the name, registered name as Obashola Dele-Oni, then it no longer belongs to the company. It belongs to you. So when you have an entrepreneur that has amassed so much properties, his net worth is showing over 200 million, and his business assets is just showing 15 million. It's a red flag. It only shows that he's concerned about himself and not about the growth of the business. So all these assets that you amass for the company adds to the collateral that you may have on offer, plus whatever you want to acquire with the new funds you are requesting for. So if you do not have sufficient collateral, inadequate collateral, I wrote inadequate because there are also types of collateral. We have properties, we have assets, there are credit bonds, and there are bank guarantees. If you maintain a good relationship with a bank, they may be willing to give a bank guarantee. If you maintain a good relationship with an insurance company, you may get a credit bond. Then properties, you need to get properties. If it's not a company, then you need to have equipment to give. That is one of you need to have all of these, and then some institutions are beginning to reduce their gap on that insurance on the collateral. Some take 150%, which I know bank, I don't know what obtains right now, while some are willing to go as low as 80%. But at least you must be able to offer something in return for the loan you are getting. So that's that. The next, going forward, we have debt to income ratio. Now, what do I mean by this? We have our own pillars. We have the word DSRA, safety margin, but I had to use this because a lot of us have, you have a lot of debt, a lot of responsibilities. You need to look at, when I take a business plan and I look at your financials, I want to see all your obligations. If I see you have so many loans, and it gets to, and I calculate it, and probably it's like 40% of your total income, it means that you are beginning to drown yourself in the world of debts, and you may not be able to pay the next one. The same thing for personal loans too. There are so many of us, the bank will tell you that if it exceeds 30%, if your loan exists, they won't give you that loan. It's the same thing for businesses as well. Whether it's a new idea, no matter what you're going into, if your debt is high, you already have an existing debt. Not that they don't want to fund any business with existing debts. It's comforting to know that an entrepreneur or a company has been taking debt and has been paying back. It's joy to us because we know that this person is credit worthy. However, if you have existing debts and we calculate it as about 40% of your income, current income, we will not give the loan. You will not get that funding because it means that you are highly geared. Basically, it's used to measure repayment capability. So how do we calculate it? You can you can do this yourself. You calculate probably the loan you have from this person, the loan you have from that company. Some of us have mortgages. We'll see everything in your statement if you're trying to hide all of this. Put it over your total income. If you calculate it, if it's over 40% or 30%, depending on the financial institutions. Every institution have their own benchmark. You will not get the loan. And it's as simple as that. I don't think, how will we know? We will know because there are credit companies out there. For every debtor in the country, every financial institution has been mandated by central bank to work with a credit bureau. So we will know, we'll always check the credit bureau. So try and maintain a low debt to income. It's also for the safety and sanity of your company. If your debt is too much, you just be working for the lender because you have to pay interest on all of these funds. So that's that on debt to income ratio. Then customer concentration. In your business plan, I said we have to look at your customer concentration. If you have a business and you have just one customer, you will not get that loan. It's just like most financial institutions will not give anybody, I said working with governments, because this is just one customer. What happens if that customer just decides to not pay? That means that you are at a risk. So you need to have you need to diversify. You need to have a lot of, be able to service a lot of people. If one product is not working, if one customer is not paying, you know you have like 10 other customers that are paying. So if you ask me, if you tell me you've been dealing with that customer for the past 10 years, for the past 2 years, for the past 5 years, and something can still happen, I won't want to fund a client that has just one customer or even 2 customers, but I'll be more comfortable to give an entrepreneur or a company a loan, a customer that has like, you have clients everywhere. So you have a lot of clients, you have diversity, you can diversify, you're not totally reliant on just one person. It's very risky for that business. And that's why we have a lot of businessmen and women that work with the government, always cash strapped, because the government takes a lot of time to pay. And then what are you doing while you're waiting for that funding, which may not come? You have businesses that work with Shell, you have businesses that work with Shadow. You can't afford to have that one person. What happens when the person is not paying? So you need to diversify. These are some of the factors that a lender looks at when it's assessing a loan. Then we have bad credit rating. Are you taking loans and not paying back? This is very, very key. If you have bad credit rating, we have about 3 major credit bureaus in Nigeria. I know we have credit CLC, we have credit registry, and there's a third one who I can't remember right now. We work with all of these companies. They show your credit history. Every company that is registered in Nigeria, as long as you are taking a loan, whoever has given you that loan will list you on that platform. If you approach me and I investigate and I realize that your last 3 loans, it has either been written off, or there's a what's it called now? It has been tagged as lost, or there is that color red on it, which means that you have not been paying down on your obligations. It's very difficult for you to get a loan, even if you have explanations for it. And that's why we always advise, if you have a problem in your business and for one reason or the other, you cannot afford to pay for that particular month, always approach the financial institution. We all want our money back. Approach the financial institution for an arrangement, for a restructure, mainly for a restructure arrangement. So always approach them. This is very key. Otherwise, you may not be able to access that next loan. And for small businesses, it's very key because you need these monies. You will not be accessing the loans. This platform is accessible to now suppliers as well. You will not be able to access loans or access that next raw material. So this is very, very key. You need to have good credit rating, because I don't know about FundQuest. For a company like GroFin, we always request for references from your customers and from your bank as well. So if they can't give you that good reference, if they can't say, oh, this person has been with me and has taken a lot of finances for a long time, and has been taking finances, you may not be accessible to loans. So, and it's also good, you can all conduct self-checks. Most of these platforms are, so conduct regular self-checks to know what is going on, what your credit rating says, so that you can easily adjust and reset your history. This is key. Then going further, we have personal guarantees. I know there are lots of entrepreneurs that are willing to give personal guarantees, but if you're not willing to give your guarantee or your personal properties, we always say that when you give a loan, you should be willing to give everything you have. But if you're not willing to, there has to be a reason why. It means that you don't believe in that business you're doing. You don't believe in the whole idea. You just want to collect the money. So you should be able to give your guarantee. Then insufficient operating history. Most people complain that financial institutions or fund managers do not like to give startups money. And the reason is that, it's like you're coming from the world of idealism to the realistic world. It's still based on idea. And a startup business is a high-risk business. And if you must price this business, is very, very high. So what you may not know is that the financial institution has assessed that company to see whether it can actually strive on debt. So if they feel that it cannot, then they may not give that loan. For existing business, if you look at your operating history, if you're that kind of company that you do business in January, then you lay low and you do another business in March, or when you give your cash flow, you keep fluctuating. It's very cyclical. There's no structure. You will have problems getting loans. You want a business that have a solid track record, not someone that goes in and out. You have like I met an entrepreneur years ago. The first time I met him, he was into software. The next time he approached me, he was working on another software. Then the third time I approached him, he was working on a shoe line. There's no balance. There's no balance, and it's a problem. It's a problem because there's no track record. You have to have what you're doing. You have to have something about it. Somebody called me 2 days ago and said they need 3.5 billion naira for a dredging business. And I'm like, how long have you been doing it? What are the plans? Oh, he said they just called to talk about it, that they got a contract. For contractors who have difficulties getting loans, you may be able to do this when you get to a conventional banking. But if you're going to approach a proper financial institutions who is ready to work with the business, because you don't do the same thing regularly. You're dredging today, tomorrow you are supplying cement, next tomorrow, you don't have there's no record, there's no track record of whatever you're doing. So, and then you also have to be profitable over the period. Nobody wants to fund a business that does not have a level of success. You're not doing well. In January, you made a loss. In February, you made a loss. In March, there's a profit. In June, it's fluctuating. Then you said exchange rate is, but you're not the only business in Nigeria. You need to be able to revamp, to be creative, and show a lot of things. That's what we want to see. So if all of these do not show in your operations, it will be very difficult to get a loan. So, and that's one of the major problems with small businesses. We have our main mat says something else, and we do something else. Our product line says something else, then we quickly have a brainwave, then we bring something in, then you are doing something different. Then it becomes, then there's fear of diversion. What the funder would say is, if I give you my money to do this, but then you are getting this money for the next 2 years, but I'm not sure that you're actually going to do that next year. So I don't want to hear that 2 years down, 1 year down the line, I don't want to hear that, oh, the business you funded was not profitable, so I've gone into something else. So that is what most financial institutions don't want to hear. So when they see that in your track record, in your operating history, it's a red flag. It's a put off. They don't want that. Kade, I hope I still have time. Okay. Okay, you're on mute. I can't hear you.
Sorry. I just noticed that I was on mute. I said you have time, madam. You can go ahead. And if there is, if you are running out of time, I would indicate to you.
Okay, thank you. So, thank you very much. So as I was saying, if you don't have a solid operating history, your loan may likely be rejected. Then economic concerns. A lot happened last year. I'm not going to go into that. And a lot of institutions stopped funding, but we have governments that came in for to save some of these entrepreneurs. I had a lot of clients that were able to access the COVID intervention funds. Financial institutions are always concerned with the safety of their funds. And why is that? Because they are keeping other people's money. Nobody has money. No bank manager or no chairman had 1 billion naira and punched it into the business. Even if you have the 1 billion naira, he wants his 1 billion naira back plus interest. So when there's an issue with the economy, when you see that there's problem, probably there's a depreciation, a decline in the foreign exchange. But recently we were trying to get some funds, and because of the current devaluation of naira, the people pull back. It only means that they care about the safety of your fund. If there's concern, the financial institutions will just wait. Now, I don't know how many of the attendees are working in the dairy industry, but there's been a recent, I think it was last year, where importation of milk was not allowed, was only given to the 3 big companies. So this has affected the price of all these milk and milk products in the country, which has led to the increase in a lot of ice cream, milks, and everything. So companies were wary of funding those businesses that were into importation of this before. Why? Because you are not sure how it's going to end. So this also affects the business. If you feel that the economy is not supporting your business at this time, it will be very difficult. Another business that I see that I can put my mind to right now is probably the event industry. You know, they are very, very affected by COVID. You know, you can't do so much. The prices have come down because they can't do high capacity. People are beginning to price them because if I can't do 1,000 guests, why do I have to pay for 1,000 people? Forgetting that they still have all the assets on ground. So it might be difficult to fund this set of businesses right now. And there are other businesses that might come to mind later. So if there are economic concern, we will not lend, the economy will not lend. So may not be for your own good and also for their own good, because they say that your money, you may not be able to pay back and they may not be able to collect their money. So at the end of it all, it's for a win-win situation because the money has to come in a timely situation. Last year was something that globally nobody could help. And a lot of us are still paying for that right now. There has to be restructuring, there has to be so many things. So that is one, but if that has been foreseen, I can bet you a lot of monies that went out earlier in the year would not have gone out. So that's on economic concerns. This particular one is very key, and that's management and corporate governance institutions. We see a lot of, I get a lot of applications. You know, you are the manager, you are the accountant, excuse me, you are the salesperson, you are the cleaner. You are not a CEO, please, you are a general manager. And that's it. Don't call yourself a CEO if you don't have an accountant, if you don't have anything. You need to have strong, top-level leadership. There has to be corporate governance. Now, a sole proprietorship, yes, you need to start from somewhere, but when you start, try and get your company registered, limited liabilities. A lot of us stay as sole proprietorship because we don't want to pay tax. It's good to pay tax because when you register as a sole proprietorship, you get access as a limited liability. You can access a lot of these government intervention, grants, and everything. You become a juristic person, they can investigate you. But if you remain a sole proprietorship, you are your own self. Nobody wants to work with somebody who is his own alpha and omega. You're taking decisions, you are not guided by someone. But if you go the extra mile and get strong top leadership, a management team, a board team, I'm not saying husband, wife, and children. I'm saying me, another person who understands my business, another person who can add value, who can advise me. This is very key for the growth of every business. If you look at most of these successful businesses, they have a management team. They have a board that meets regularly. Your business is not too small for that. We all need advisors, we all need mentors. And this is what comes to play when you have a strong management team. Your loan may be declined if your company does not have all of this, because then it's just you alone carrying that briefcase, walking around and says you want loan. It's going to be very difficult to get a loan. So I want to see a limited liability, and I want to see a company, or if you're a sole proprietor, I want to see in your business plan, the plans you have to become this, to have the top management. Who is the CEO? Who is the head of operations? Who is your marketer? What is the delegation of authority like? Who is doing what? If you are not around what is at least going on, the moment you take that vacation as business stopped, this is key. Succession plan. What is your succession plan? I want to fund a business. I believe FundQuest as well. They want to fund a business and give you money, knowing that if anything happens today, God forbid, your business is going. We have so many entrepreneurs. The moment they step out of the country on vacation, everything, every operation stops. You can't talk to the accountant. You call the accountant tells you, oh, I have to wait for madam. I have to wait for a guy. You know, it doesn't work like that. That's not a business. That's your hobby. It's not supposed to be. You have to have a business that works whether you are there or not. That is very, very key. You know, a noticeable chain of command. Something, if I'm not around, my business is going on. My business is making for me. They are paying as at when due. Corporate governance issues is key. Then let us pay our tax. That is very, very key. pay your tax, formalization, ensure that your business is top-notch on tax. If you don't pay your tax, if you're owing on tax, VAT, I know people, we all have our opinion about the government. We're not here to discuss it, but the fact is that as long as your business operates in Nigeria, we have to obey the government. We have to work with it. And that's the only way we can access all these intervention funds, all this government funding. And also, you are at a risk of getting your business locked up. A few years back, we invested in a business along the airport road, and 6 months into disbursement, the business was locked up for tax evasion. And it was locked up for almost a year. And you can imagine the accumulation of interest, because this has to go on, because you had to pay the owner of the money, the interest. So you have to pay the interest on your business. So for business continuity, you have to ensure, because government can clamp down on you anytime. So for your business of continuity, for access into whatever, if you're planning on international funding, all of these things come to be. They speak about the reputation, the integrity of your business. Forget government, do what you need to do for the health of your business. Tax payments, management, board, how you treat your clients, how you treat your staff, are you paying what is it called now? Minimum wage, medicals, a lot of these things come to be. Even if you cannot do the normal HMO, do some things, no matter how small. There's, there are levels to how we can all of this, but the economy has grown to the point that we have whatever you want, you have a shoe that fits you. So that's you, and you have a budget that can work for you. But what is key is that business have to have a structure. If you have an entrepreneur that decides that, oh, I can do my business on my own, then you can as well raise the capital on your own. But we all know that businesses you can't get to that level just trying to bootstrap, just bootstrapping your business. You need a level of external funding into your business. Then over time, we've introduced a lot of businesses also to international funding. You've recommended. When they request for your business plan, they also request for documentations for your tax, for your payees, and all of these things. So we now have customers that, you start running back to take all these backlogs that's already high and may take long. And while you're trying to resolve all of that, you've lost the opportunity. So as much as you can, please try and get this thing done timely. It's very important. It helps your business. It helps you get that access to loans. It's very easy. You won't have any problem with all of these clients. And when you have properties, ensure that you have it registered, title documents and things like that in the rightful manner, in the name of the business, register it, number it, all of these things come to play. Have your table, have your schedule, asset schedule, do your stock keeping regularly, have people in charge of that. Part of corporate governance and management issues are having your invoices, your way bills. Every product you sell is receipted. These are the things that helps you also to monitor your business. If you have things like that, it's very difficult for your staff to pilfer. So it helps the growth of your business. So all of this now, ask me, what is the business of the financier with all of this? For a financier that gives you a term, if you want a loan of up to 5 years, that person is no longer giving you a loan. That person becomes a business partner. And that person is involved in your day-to-day running, may not be on the management of the business. He wants to see how things are coming, because if it doesn't work, the money does not come back in. So I want to see how everything works. And they would also be able to prefer advice. For us, it's called business support, technical assistance. So be able to prefer advice, look for ways to help you improve. And if they have to recommend an external technical partner to come to you, they will do that. So it's very key for all of this. It helps your business and put you in structure, because it's to get to that point that you would outgrow that lender. And that's the whole point of all of this. You outgrow the lender and you'll be able to, and that's how people get all of this funding. If your product is fantastic, if your structure is fantastic, then everybody will want to work with you. Then weakening industry. What industry are you in? We have a lot of industries. We have some key industries that most companies will want to work with. What industry? Are you in events management? Are you in the manufacturing industry? Are you in the health sector? Are you in the education industry? You need to consistently, as an entrepreneur, assess your industry. Will I be able to get this loan? Is it good for me? What is my industry strain? Are people still interested here? You know, you need to be able to do, if the bank sees it as weak or in decline, then it may be very, very difficult to get a loan at that time. It may not be a permanent condition, but at least you keep monitoring it, everything. If it's weak, then the loan will not be good for you. But if it's strong, everybody wants to invest in it. So if the loan is declined because of the industry, it is definitely for the good of the entrepreneur. Then we have know your lender. Know your lender. There are lots of institutions out there. You need to investigate proper DDI. By DDI, I mean due diligence investigation on that company you're going to. We have some companies that are impact focused. What do I mean by impact focused? They need to be sure that you're employing people. They assess you by the number of employees you have, by the number of employees you're bringing in, by the number of youth you're managing, by the number of women you have in the business, by the number of women you have on board. You know, some people just want to fund short term, and we have some companies that don't do short term. So if you have a contract and you approach a company that only does term loans, you may not access that funding. You know, we receive phone calls normally, and you hear that person who says, "Oh, I need 1 million naira," and I tell them that the minimum we do is $100,000, and they say, "Oh, okay, I just remembered. I have a project that needs 100,000 naira." No, you don't need the money, but because you hear that I'm giving $100,000, you want that. So you need to investigate banks, microfinance, and all these funders to see exactly what they are doing before you approach them. Otherwise, you'll be wasting your own time and wasting their own time as well. So, and also all these, you know, is there online? You can always send an inquiry online. You can request for a meeting online to all of these people, or a simple phone call will do before you make that visit to them. So this is very key so that you don't waste your time. Then you also need to know the kind of interest and revenues they are looking at. Everything is, I'm sure, is there online, and if not, just at the end of it, investigate that lender to be sure that at the end of giving them money or whatever, everything as you have, you know, you are meeting the right person, you know, you are working with the right lender. So what are my recommendations? We're getting to the head. What are my recommendations? I say, get to work on your business plan. This must be detailed and of good quality. You can't, you know, for me, I always tell people I meet, at least put something to paper. If you're going to get a consultant to work on your business plan, you're going to be talking to the consultant. You're going to be discussing with the consultant. And at the end of it all, the consultant will put to paper what you have told him or her. However, put something down first, then you can get the person to do it. If you don't have time, the person always get, but at least you need a business plan. So if we read your business plan, or if the financial institution reads your business plan, they're able to ask questions. Questions help them to understand your business properly. Then the next thing is improve on your corporate governance and business formalization. Register your business. Get a bank account, a corporate bank account. Stop keeping money in the company. Start putting your money in the bank account. It helps to follow process. Get an account clerk or an accounting consultant. Start working on your profit and loss account, on your balance sheets, your cash flow. Renew it. You can do this thing regular. Your business plan can always be expanded on. You can take it out. You can add to it if you have a new idea or anything. Improve on your corporate governance. Look at people with like minds. You know, in Nigeria, we don't like to, collaborations are not welcome because everybody feels that somebody wants to take their business from them. Nobody wants to steal my idea. However, we have businesses that succeed and have it. Investigate good people that you can work with. They also even help to, how will I say, invest in your business. They might just have that fantastic idea, bring in money to your business to take you to the next level. Ideas, look for trusted people to bring on board. If you don't have, think about it. It's very, very key. It also improves your access to funding. Then ensure you have a good credit history. Good credit history is key. If you have a good management, if you have a good business plan, if you don't meet your obligations regularly, it's not good for the business. And if whoever you're bringing on board your business must also have a good credit record. If your board of directors they don't like paying bills, they will know checks will be done on them, and these people will not. Because of that, you may not be able to access them. So before you bring anybody on board of your business, do your due diligence well. Then monitor your industry. Look for areas of diversification. I like to use the publishing sector, the book sector areas right now. If you're a publisher and you see that, because that's an industry that people don't want to invest right now, because a lot of people are going towards electronic book now. So if you're into publishing right now, look for areas of diversification. Start putting your books online or doing something new. There are new ideas. There are things that you can do. So don't just stay static. People like entrepreneurs, financial institutions like entrepreneurs that are creative, that are able to do something new with what they have. Then you need to understand your market and expand your reach. If you're in Lagos, can you create a market in Abeokuta? If you're in Ikeja, can you go to VI? Can you go to Lekki? Or you just want to stay? You want to just stay safe? Businesses are not for people that, it's good to stay safe, but you need to expand your market reach. Then get your timing right. This is one key thing that affects businesses as well. An entrepreneur needs money today, and they come to the bank today. Is not going to work. You can't, the bank should be allowed a level of due diligence. Most people need up to 30 days to get a loan of 1 week. So when you see an entrepreneur, you want to do, I'm not talking about contracts, LPOs, or invoice discount right now, but if you require that term loan for business expansion, you should have been thinking of the business expansion for days or months. So if you need that money, you should have planned like, by the next 2 or 3 months, I'm going to require this fund for this level. Don't wait till that period, because we need a level of due diligence as well. So don't wait before you approach lenders. You need to do proper planning. Approach lenders, because we expect that, every lender expects that you continue to do your business, you continue your operations while you're working on that new funding. Your operations must not stop. Because we hear it a lot, you people are you're slowing me down, I can't. No, with proper planning, you should be able to get your timing right, because every institution also requires time to work on your request. So my question is, start doing the needful and start seeking the appropriate lender right now. Thank you very much. Olakunle, back to you for questions.
Thank you very much, Mrs. Dele-Oni. It's been an enlightening 1 hour. I almost wanted to stop you at some point, but I said, no, this is too good to stop. So thank you very much once again for gracing us with your presence today. So we've all listened to Mrs. Dele-Oni. She's spoken to why we don't access loans. She has mentioned that the first thing you need to have when you walk in to get to request for a loan is your business plan. I mean, once you're done having a conversation with your with the lender, people don't keep information that much anymore. The only thing that would remind them of that transaction is the business plan you put in front of them. Then you need to have your financials. Startup, you need your projections. If you're not a startup, you're an existing business. Obviously, you need to show your cash flow. And then you also need to have collateral where necessary. These days, we have loans that don't necessarily have, and we have categories of collaterals anyway, where you could not be able to provide one, but you could obviously be able to provide the other. Then you also need to look at your debt to income ratio. Just don't go shopping around for loans from every financial institution that is available. And then you also need to look at your customer concentration. If you have just one customer, we know the one customer, let me not mention names. So if you have just one customer, you shouldn't that would be too much of a concentration, because if there's a default there, then there's a problem. How do you repay that loan that you have gotten. Then she also spoke about your credit rating. If you borrow loans with the intention of not paying back, obviously you wouldn't be able to access another one, because the country that we live in today, we live in a digital age. And if you loan from one financial institution and you want to access another one from another financial institution, they will be able to find out that you've gotten a loan somewhere else. And if you don't pay, it tells to your character. Then we also have a personal guarantee. She spoke about the personal guarantee. Would you be able to back that business plan that you've presented? You as a person, will you be able to back that business plan? Will you be able to guarantee it? And then your business history also matters. Yes, there are certain kind of loans that are suitable for startups, but not all kinds of loans can be given to startups. So you need to show that you've had some certain sort of history doing this business and you can be trusted with the money of an investor. Then she also spoke about the economic situation of the industry where you're in. It might be a factor why you're not getting loans. If everybody's running away from a certain industry, let's say we are looking at the world is moving towards cleaner energy, and you see, and when everybody is moving away from oil, you say that is what you want to do. Most likely you wouldn't get a loan, because I mean everybody's moving away from that direction. And then Mrs. Dele-Oni also spoke about structure. You can't be a jack of all trades if you want to get loans. You can't just be the CEO, the MD, the COO, the accountant. How do you even juggle all those things? It's not humanly possible. You would most likely break down what happens to the loan that you've collected. So you also need to have specific roles for specific people with certain structures put in place that shows the legitimacy of your business. Then obviously, she also spoke about knowing your lender. You want to access loans. If you want a personal loan, you don't go to the Bank of Industry. Obviously, they don't give personal loans there. So you need to know your lender. What kind of loans does this particular institution grant? What kind of loans does this other institution grant? Will this institution be able to grant me the loan that I want at this point in time? And so on and so forth. Then she also spoke about getting your timing right. You have a transaction where you've anticipated that you're going to need a loan for that, and you anticipated that perhaps 3-4 months before the due date, and you're coming to the financier a day before you need that money to move on. Obviously, you won't get the money because there are processes to be had. The processes won't disappear simply because you need that money tomorrow. So you have to get your timing right. Also, in terms of, because there's a loan available, let's say federal government has certain loan now, certain funding that is available, doesn't mean you should jump on it. You may be doing your business more bad than good if the timing is wrong. So this is just a brief summary of all what Mrs. Dele-Oni has told us today. Before I go along to the questions that have been popping up, I want to publish the results of the poll I put up earlier. So it should be showing on your screen shortly. Yeah, so for the attendees we've had today, 71% of them have indicated that they are salary earners, while the remaining 29 are entrepreneurs, business owners. Well, there is still, just like Mrs. Dele-Oni have said, as an entrepreneur, you shouldn't be a jack of all trades. We hope the ones here are not jack of all trades. Well, if you were, you know to be different going forward. I'm going to be putting up another poll shortly. The poll will be asking you if you've requested for a loan before, and if you've been denying the loan before in the past. So would implore attendees to just respond, as the questions and the responses and the conversations we'll be having going forward will be surrounding those, the answers to those questions. So that poll should be going up. Poll should be going up shortly. Okay, I think it should be on your screen now. We have 2 questions. Have you applied for a loan in the past? And have you been denied a loan in the past? So please feel free to participate in that poll currently ongoing on your screen. So we also have with us on, okay, before I call on Mr. Ayodeji to speak to some of the questions, I want to ask one particular one to Mrs. Dele-Oni. So Mrs. Dele-Oni, there's a question here that says, for companies who are in a business like event planning, who are faced with economic challenges due to the COVID and its effects on the economy. What's the best way to access loans, considering those economic concerns that you mentioned of the lenders? Lenders have economic concerns regarding your industry. Someone who plays in the event planning space, where because of the whole social distancing and every other aspect that comes with the whole COVID, that came with the whole COVID situation, how does such business go about getting loans where needed? Mrs. Dele-Oni, you're muted. Okay.
Okay, thank you, Olukade. Okay, for event planning, it would actually be nice to know what sector. But for the company, for right now, I would say that this entrepreneur, if you're in the event industry right now, to hold on taking a loan right now. But if you must, the best place to actually go is your bank. If there's a level of overdraft or something that can be given to the company. Because why? There's still a lot of uncertainty in the country. The COVID is still out there. There's still so many rules and regulation that will affect them. And everybody wants to be sure that you can actually. Finances are tight. People are wary and really do not want to pay that premium. So if you want to access loans, if you're not getting new investors, people that actually understand you, your own network, the bank, your bank, who you've been depositing monies into over the years, should be able to give you some form of leverage here in this regard. That's my own advice. Otherwise, considering what the economy is like, I would also say, why not wait and let's see how the whole situation, because you also don't want a loan that will become a burden to you on the long run. So that's what I would say. So if I get a request from an event center right now to build one, I would say no, we'll hold on first. And let's see. Also because what is $1 today was not $1 and is increasing every month. And for so many financial institutions, you use the dollar bit to assess your loan. So if you're asking for $1,000 right now, it's about 500,000 naira. So you're going to spend much more to raise an event center right now than what you did last year. So why not hold on until you see that the industry is picking up again before you get that loan? So that's an advice. That's my advice.
Thank you very much, Mrs. Dele-Oni. I was muted there. So one more question before I move to Mr. Ayodeji. One of our participants have asked a question I would want your take on. He said, what's your advice on taking on private equity partners in manufacturing businesses? He's specific about the sector this time.
Yes, we tried to. I remember 2-3 years ago, I was trying to get one for, it's quite good, especially because manufacturing companies are very, very delicate. What do I mean by very delicate? You have to do huge margins with little profits, and a lot of your money is going into fixed variables. There's a lot of fixed variables in the company. So it's quite good if you can assess it. But remember that private equity partners, they have a level of turnover they have to work with. You must be profitable. You must not have existing, you can have a loan, but your loan has to be performing. You must be looking at about $5 million there. So you really need to up your game. Before you get equity partners, you have to go to a certain level. So it's quite good if you can get that private equity partner that believes in your product. The product is also very key. The location is quite key as well. So if you can raise, it's very difficult, but if you can raise it, it's going to be a plus for that expansion plan. So I think it's a very good one. 2 years ago, GroFin was trying to help. We had linked up one of our clients with a private equity company. We're trying to package it for an equity company, but eventually the client repaid and we didn't have to go for that anymore. But it's a good one, especially for manufacturing industry. They need that huge burden. And for manufacturing companies, as much as they can, they need to reduce their interest burden also, because foreign exchange has not been very nice to them. And with a lot of international companies coming in, bringing cheaper funds and competing with them. They need that infusion of a lot of funds into their business. So if this person can get that PE partner into the business, the right one, you need to also investigate, know them, know their track record, please. You don't want to you have to learn your lessons from other people's experience as well. It's going to be a good one.
Thank you very much, Mrs. Dele-Oni. Before I go ahead, I would like to inform the audience that your questions can be placed at the question and answer section that's at the bottom of your screen. And you can also use the option of raising your hand if you want to comment live on the session. I will be enabling voice comments from a few.
I see a question here, and I think it's quite interesting, but how does one repair a damaged credit history?
Okay.
I'd like to speak to that.
Okay. Hold on, Mrs. Dele-Oni. I would get to that now. Okay. So, sorry, the audience now. If you want to make a comment on the program, you can just raise your hand, and then we would indicate and then bring you on to speak. So go ahead now, Mrs. Dele-Oni.
Okay. So for a damaged credit history, what you can do is that as much as going forward, you can't do anything to what has been done in the past, but you can ensure that you don't try and make it happen again. That institution, you need to start creating good relationship, create good. It's going to be very, very difficult to get out of it. But if you do have a loan that has been bad, that is still lying there bad, go back to the institution and get it right. Agree on a repayment structure, restructure the loan, and start servicing it. Is very key. It will help you. If whatever every institution have their policy, agree on a restructure and start paying down on that loan. Everybody wants their money back. So the moment you start paying back on the loan, the classification changes. If you see that you paid back in 6 months, you are consistent with that, your loan will change. You would have rehabilitated that loan, and then it will start working well in your favor. Ensure that you don't fall back again. So that's very key. So you just need to go back to whoever you're owing and make an arrangement with them and start making that repayment. That's the only way you can repair a damaged history.
Okay, thank you very much. Mr. Ayodeji. Mr. Ayodeji, are you with us?
Hi, Kayode.
Yes, this same question that Mrs. Dele-Oni has just responded to, how does one repair a damaged credit history? I want you to tell us, have you had a situation in the past where clients got into bad debt due to certain factors beyond the control of the promoters of that business at that point in time? And if you have, how did you respond to that? What was the solution that you and the client came to that took the client that helped the client repair such a bad credit history?
Okay, thank you very much, Kayode. It's been a very, very enlightening session so far. So responding to your question, I've noticed from my own experience that a lot of Nigerians, when they have bad loans, the first thing they do is to try to avoid the financier. Let's take, for instance, all these micro lending platforms. You have people borrowing money from those platforms, and maybe for any reason they cannot meet those obligations. They look for the next micro lending platform to default or to defraud. But like the main speaker said, when you have a bad loan, you need to meet your financier and try and negotiate and get a repayment plan that would suit your business or suit your cash flow at this particular point in time. So in terms of my experience, we've had situations where customers cannot meet their obligations for genuine reasons, maybe force majeure. Like last year, there was a pandemic. Nobody saw a lockdown of 3 months coming, but then it happened. And then those are some of the challenges that we would have to face as financiers. But what we need to do is try and look for ways to resuscitate that business. For FundQuest in particular, for instance, if we have that kind of scenario, the first thing we would do is meet with these clients, find out why this obligation cannot be paid at this particular time. Do you need more time? Let's say initially the loan was for a period of 3 months and the customer cannot meet up with that repayment plan. Then we explore the option of can we extend for maybe another 3 months or another 6 months, depending on how what the customer's cash flow is in at a particular point in time. So the first step would be meet with this customer, find out exactly why that obligation cannot be paid at a particular time, and then probably dimension the cash flow and see how long or how much more time that the customer would need to be able to meet up with that obligation.
Thank you very much, Mr. Ayodeji, for that response. Okay, before I continue with you, I have 2 attendees willing to contribute live. They have questions and they want to speak to it. I'll be getting one, I'll be bringing one in shortly, and then we'll go ahead, and furthermore, as we go on, I'll bring the order. So Mr. Daniel Okunji, let's hear you briefly. Good afternoon. Okay, good morning. We are still in the morning. Mr. Daniel Okunji, you're muted. Hello, Mr. Okunji, are you there with us? Okay, while we go ahead, we'll be bringing in the second person much later. Okay, so the poll results are, we've had a lot of voters voting, answering the questions for the poll, and I will be displaying the results shortly so that our panelists can see them. So we have 56% of the people currently here, indicating that they have applied for a loan in the past, while 44 haven't. For those that have applied in the past, we have 31% indicating that they've been denied before. We would love to know your reasons. You can put the reasons in the chat box and we'll be looking at them one after the other, and if we can comment on any of them, we would. Then we have 69% indicating that they haven't been denied a loan in the past. So if you indicated that you have been denied a loan in the past, when you applied, you could just briefly just state the reason why that loan was declined in the chat section at the bottom of your screen. So back to you, Mr. Ayodeji. Mr. Ayodeji, are you here with us?
Yes, go on, Kylie.
Oh, okay. So we have a question here that says, if one is a staff of a company and the staff collected a loan of like 3 million and lost his or her job during the whole COVID era and he couldn't pay, what would you advise such a person to do? Now, this is a personal loan, or seems to be a personal loan in this case. But what would you advise a client, such a client, to do?
Okay, thank you for that question, Coyote. Most of the time, even for salary loans, one of the minimum requirements would be that a guarantor is provided for that facility. So the first option would be to engage the guarantor to meet up with that obligation. If for any reason the guarantor cannot meet up with that obligation, then that client will have to approach the financial institution to explain why the obligation cannot be met, provide necessary evidence to show that, yes, truly there was a pandemic and I lost my job. And because of this reason, I cannot meet my obligation. I need X more time, maybe 2 months, 3 months, to get a new job. And then at that point, I can commence meeting my obligation. So I think what is very essential between the borrower and the lender, which in most cases is missing, is communication. You need to speak to your lender and let your lender know that for any reason why you cannot meet your obligation, communicate. This is a very peculiar situation, and the lender has to be understanding in this instance. But the first preference, like I said, would be to engage the guarantor and have the guarantor take up the obligation that is already overdue.
Okay, thank you, Mr. Ayodeji. I want to bring in Mr. Obina Njoku to make a comment before we continue. Mr. Obina Njoku, are you with us? Mr. Njoku, are you there?
Yes, I'm here. Can you hear me?
Good morning. We can hear you.
Fantastic. Good morning. Thank you all. This has been a really insightful session. I really loved the presentation by Mrs. Obashola. That was really insightful. So my question is I want to create an abstract scenario, however, with some really specific numbers, and it might eventually sound like free consulting, but let's just roll with it. So if over the next 3 years, right, I wanted to achieve or get a facility of $2 million to fund an infrastructure build, so to build a factory, what are the steps an SME in manufacturing? I'm the guy that asked the manufacturing question. What are the steps that you need to take between now and when you get that loan to be able to get that kind of money? So it's not at the $5 million level for private equity just here, but at the $2 million level, you wanted to access a facility like that. You have roughly a decent turnover. What numbers do you have to hit in terms of turnover, or what's corporate governance structures do you need to put in place to be able to access that between now and within the next 2-3 years?
Mr. Njoku, sorry, is this for an existing business or for a startup?
No, it's an existing business.
An existing business. So there's like an expansion plan.
Yes, this is an existing business. Say it's an existing business, a family business that has been in the industry for over 15 years.
Okay. Before I throw that question to Mr. Ayodeji, I just want to make a few comments on that. Okay, first of all, we've spoken like Mrs. Dele-Oni has indicated at the beginning of the program, the first thing you would need to do is to prepare a solid business plan. The fact that the business has been existing for 15 years is a plus. It's a good one for the business. And but you will need to show the numbers. What numbers has this company been able to make over this period of time that it has been in existence? What is the growth? What is the growth percentage from when it started till now? Now, most lenders wouldn't want to provide you with more loan than they think your existing business can currently carry. Now, in terms of the numbers you need to churn out to be able to access a $2 million USD. I wouldn't be able to state for all financiers. But each financier would have specific numbers that they would want you to currently be churning out before you'll be able to access such a facility. And one more thing is, you need to be able to have your own scheme, because for every loan you want to access, there must be something you're putting in. Because if you're not putting in something, it means you don't even trust the expansion plan that you want to embark upon. So there must be something you're putting in, that this is what I'm putting in, and this is what I have, and this is what I want to get in terms of this particular transaction. And like you said, this is we have limited time here, and this is basically free consultation, but we will be able to attend to that in much more detail if you get to us outside the session. I would however ask Mrs. Dele-Oni if she wants to make a comment on that.
Okay, thanks, Kayode. Thank you, Mr. Obina. To build a $2 million right now is about 1 billion naira, if I may understand, if I'm getting it right. I'm just using 500 estimate, and to build a factory. So I want to assume that there's a land, and then you've been doing 15 years. Now, the first thing you need to ensure, because what you said is that in preparatory, ensure that your business does not have a stopgap. If anything, if it has to stop in between, there has to be a reason. Keep good records, like Claudia said, give good records of your financials, all your monies, ensure that you build a good banking relationship. What I would say also is that whatever you need to do right now, if you can also continue to grow your turnover, expand your market reach, make sure that your tax is very good, because when you are looking at a $2 million bank, everybody makes, it's a lot of money, and people will be sure that your formalization is key. Then your turnover, if you want like a 1 billion, you should be able to make something like this in a year, 1 billion in a year or more than. So if you're making like a turnover of 100 million naira in a year, you will not be able to access that loan. It must be proportional to what you're getting, because the existing business, at least an existing business, all lenders believe that while you pay, even if they give you moratorium is not absolutely free. You delay the interest gratification to the end. But right now, the new incentives, the new norm is that even if there's a moratorium, you should be able to pay at least if it's the interest bit within that period. Why? To ease the burden. Because most people think that moratorium it's very good, but no, it increases your repayment. So you need to at least, existing must be able to pay some form of money during that moratorium period. And like how this says, start putting together. If this land that you want to build on is not registered, ensure that it is registered in the company's name, belongs to the company. Put together your assets. Then one key thing that people need to ensure that your assets are well maintained. Engineers' reports are very key. You need to have a QA to look at everything you're doing. Then depending on if it's a construction, you need an there's this ESG regulatory thing that has to go into it as well. So all of this, and you need to be sure that the land that you are building is approved for commercials. Nobody will invest in you building a factory where the government will come and put that thing on. So all of this will come to play. Then if you're getting a term loan oftentimes does not exist 7 years. So your cash flow projections also has to work in line with the repayment calculation. So if you can estimate, do your own projections, estimate your monthly repayments with the worst-case scenario of the interest rate, start investigating the interest rate and know what you want, how you want to know what your percentage that your sales will go into at that time. Then if you can within the period also to see if you can reduce the level of debt you are taking at that time when it comes. So all of this that's what I would say to do. But at the end of the day, when we get to that bridge, we'll cross it. But this is some of the things you need to do in preparation of that. Then in terms of board management too, you need to look at your board, your management team has to be well versed. Your accounting, then key thing also is your software. You need to be able to churn out your monthly accounts. If you bring a bulk P&L document to me, we would request a month on month because we want to see the growth. We want to see if your business is cyclical or if it makes profit all through the year. If your turnover is growing or it has a cyclical trend. So all of this thing is what you need to watch out for while you are preparing to seek that finance. I hope that helps.
Yes, thank you so much. That helped.
Thank you, Mr. Njoku.
Yes, sir.
Thank you, Mr. Njoku. You've heard from us. It is something that, like Mrs. Dele-Oni said, if you need to, most financiers need to get their money back, but not just that, they also need to get return on that money that they've made because it's an investment to them. That's the key thing. That's the most important thing. So if you're looking at that in mind, you're also going to be asking yourself, how can I make this business too solid, this business plan too solid that they would refuse to reject it? And it is something that we do at FundQuest if you would want to push that idea to the next level. Because the truth of the matter is, if by the time you're done with your business plan and you look at your financials, you may not actually need a 2 million USD like you think you need. You may need something way lesser than that or way more, or your business may not be able to carry that such a debt regardless of the tenure that is being offered to you. So it's one of the things that we do in our advisory at FundQuest, and we could talk much more after this event. So thank you very much again, Mr. Obina Njoku. I will be getting back to the questions and answers on the chat box. So Mr. Ayodeji, I want to ask you this next question. We should be coming to the end of this program shortly, but before that, we just want to take a few questions. So there's a question here that is interesting that I would want to ask you. The question goes this way. Considering that the business climate in Nigeria is largely unstable, and this instability of these businesses can impact business projections negatively, would you advise that entrepreneurs seek short-term or long-term loans?
Okay, Kayode, thank you for that question. Now, the economy is still under recovery from the impact of the COVID-19 pandemic. I would say, in responding to that question, I would say that it depends on the type of loan that such a business owner would want to access. There are different types and categories of loan. If what is being considered is maybe a contract financing or an LPO financing, by that I mean a loan that is tied to a specific cash flow that requires the performance of the business owner. For such a transaction, then a short-term funding arrangement can still be suitable. But if what we are talking about is core working capital finance, that will be largely impacted by the economy, regardless of the sector. It's advisable that you go for something that is fairly longer. So for working capital financing that would be invested in business, core business and day-to-day operations of the business, it's better you go for a long term. That will give you a breather in case anything goes wrong with the business plan or projection or due to economic factors. So I would say that it depends on the type of loan or what the purpose of that fund is for.
Okay, thank you very much, Mr. Ayodeji. He has indicated that the decision would rest on the type of loan that is being sought after. There is something that was said earlier in the program today by Mrs. Dele-Oni. She said, separate yourself from your business. I think it is something that cannot be hammered enough. It came to my mind as Mr. Ayodeji was speaking to that question. Most business owners they're running the business as themselves. They're using their private bank accounts, using personal, buying assets, business assets in their name. It doesn't do you any good when you now have needs for loans, because at this point in time, your so-called company assets are not in the company's name. They can't be the company's assets if they are not in the company's name. They become your personal assets. We're looking for cash flow projections. You don't have cash flow projections because all your primary transactions have been going through your personal bank account. It does you little good because most times the financiers want to see documents. This is what shows that this is the amount of turnover you have in a year, and this is what gives credence to the signing off of that loan that they want to grant to you. Okay, so there's a question here by, okay, it's much of a comment. The same from Mr. Owina and Jogo said, can we share the slide deck on the group? Now to everyone, the whole presentation is being recorded and will be shared with everybody who has participated at the end of the session. There will also be a survey session, but that will pop up once the session has come to an end. Okay, so one more question here before we do a summary of what has happened today, and then we'll call it a day. The question goes this way. For someone who runs a poultry and piggery farm and has approached the BOI for a loan to buy feeds, which the request was declined, would you advise the person to approach a commercial bank considering the gap between the interest rates charged at both the BOI and the commercial banks? Mrs. Dele-Oni, if you would like to respond to that. I may read it again if you want me to.
No, I'm fine. I got it. Okay, so would you advise the person to approach a commercial bank? There's no advice here, really. I'd love the person to go back to BOI and find out why the loan was declined. If a loan is declined, you have the option, especially with BOI, who are quite flexible. If the loan was declined by BOI, then we need to know what, is it because of collateral? Is it, are you not getting guarantees? Why was it declined? That is very key. If the reason why it was declined can be provided, then you can go back to BOI. I've worked with BOI and I know that they are that flexible. So the reason why a loan is declined might be probably you're not getting bank guarantees. Now, if you're not getting bank guarantees, it means that you may not have a very good relationship with your bank, with the commercial bank. So now, if you have a good relationship, but if it's the other way, I don't know, there might be other reasons, but you need to always find. So most entrepreneurs don't go back to say, why was it not declined? So that you can, it helps to improve your next approach or know what to do. If it was declined because of lack of collateral, if it was declined because of lack of adequate cash flow, then it will help you to approach the next financiers. Now, considering the gap between interest rates charged at both BOI and commercial bank, it all depends on you and your business. You need to, like the cash flow projection, if you look at your cash flow, and if you, okay, it says they said they can only finance the purchase of machines for feed production. Okay, but I know that they started giving working capital. But now, if they can give purchase of machines and you can get your working capital elsewhere, it's still fine. And if the commercial, you have to marry the gap between the interest rates. If the bank A will give me 30% or 25% and give me these monies for the long term, or if they will assure me a certain amount of working term loan and I still get the money, it all depends on you to do your proper cash flow and see the margin at the end of the day. That is what informs whether you can go to the commercial bank. What is your gross profit margin? What is your gross profit margin? What is your net profit margin? And then you need to be able to calculate your EBITDA. EBITDA means your earnings before interest rates and tax and depreciation and amortization. I hope that wasn't too long. So you need to look at your free cash flow. If all of these are positive and you calculate the incoming interest rates and repayment plan, your interest goes into your fixed variables. If you're able to calculate your interest rate and you still have a bit and the ratio is still okay, you can go ahead and approach the commercial bank for the short term. But I know commercial banks don't do more than 2 years. BOI is able to do 5 years. So if you have access to working capital from your commercial bank for 2 years, you can get the machine from BOI at 9% and get the working capital at 20%. But most working capital depend on your working capital cycle as well. You need to be able to calculate that. What do you produce? What is your operating cycle? If your operating cycle is 6 months, 9 months, you may not need working capital of 2 years, because that is actually the fear of most companies and BI. Because if you give a company that has a 45-day cycle, a working capital of 2 years, you are giving room for diversion. So when you now give the money, by the time they do that, instead of paying back, they start using the money for something else. So my take is, look at your cash flow, look at the impact of this commercial bank loan on your bottom line. If you still have a lot of safety margin, that has debt to income ratio, if it's still okay, you can go for it. At the end of it all depends on you understanding your business, your pricing, your expenses, and your net profit. If your business can accommodate it, then you can go for it. And if you can access the BI funding and get the working capital from another commercial bank, all good as well. So no, there's no perfect thing. It all depends on the cash, the cash capacity of the company on the long term. Bottom line is that you need the money. So you need to weigh the options well. But commercial bank will always require collateral from you as well. So you also need to look at that. And if you don't have a good relationship with them, they may also not give you that long-term loan that you require. So that's my take on that question.
Thank you very much. I believe it should have done okay. He's even thanking you in the Q&A. Although the Q&A is for questions and the chat box is for comments, I believe Mrs. Dele-Oni has done justice to that question. We had Mr. Bisioni, the Executive Director of FundQuest, indicating that he wanted to speak, but it seems he has dropped out of the program now. So we have spent close to about 1 hour 40 minutes on this program today, and it's been a wonderfully enlightening session. Before we call it a day, I want to ask our Managing Director, who has made this show possible, this event possible today, to say a few words
Yeah, thank you, Kayode. It's been an exciting time with our audience today. Mr. Obashola Dele-Oni has done enough justice to the issue at stake. We have been well informed and well educated. It has been an exciting time, I would say. In terms of the MSME operators, I think it is important that the scaling of their business is done in phases rather than the wholesome or one full sweep expansion that all of them are contemplated in most cases. Where you see an institution operating a business that sells a turnover of 200 million per annum over the last 4 years and suddenly come with a business plan that you want to be selling 5 billion in the following year, you ask yourself how, why, where are the business coming from, and who are the competitors? At the end of the day, you look at the stock cycle that he produced. What he produced in month 1 gets sold off in month 3. So what it then means is that the velocity or speed of the stock sales are very slow. Here you come and then you want to expand 5 folds or 10 folds. Then you ask yourself, where are the patronage? Where it's going to come from? So most of them, more often than not, they don't do the dimensioning of their scope and their clients. And the competitor analysis too are always very lacking. There was a time I asked somebody who produced ice cream, and I asked, who are your competitors? He was mentioning the likes of those that produce Zobo, Coca-Cola, and the rest of them. And I asked that, look, do you even believe that the person that sells recharge card for phone are your competitors? Because some of these things, we don't even put them in perspective. People would like to charge their phone before they drink ice cream. They want to have data before they drink ice cream. Those are also competitors for their products. So all in all, we want to admonish the MSMEs to take things one step at a time and grow gradually, rather than going into a business, then you multiply by 10 folds and then you get stuck. You can't go forward, then you can't go backwards. And more importantly, again, is the fact that cash flow is also king. Selling on credit is not bad, but the day you start having problem collecting your receivables, it's a recipe for disaster. Much as you want to grow by selling on credit and putting your stock out there, you must have a collection mechanism to ensure that you get all your money that are outside so that you'll be able to break even and make marginal profit.
Hello, Mr. Ayodeji. Hello, sir. Okay, we seem to have lost Mr. Ayodeji there. So, okay.
Are you with me, Kayode? Thank you. So on that note, I want to thank everybody. I thank Mrs. Dele-Oni for giving her time always, and we also appreciate all our participants. Thank you.
Thank you very much, Mr. Ayodeji, and thank you again, Mrs. Obashola Dele-Oni. Thank you, Mr. Ayodeji, and thank you to the wonderful participants that have made this show possible. So we've heard today all the reasons why our loan applications have not been granted. We've seen that credits are very important, very, very important for small and medium scale enterprises, especially in a country like ours, where they have there's a history of not getting loans for SMEs. Most times the issues have been, the SME, the entrepreneurs don't know the problems. They don't know what exactly is wrong. Why am I not getting the loan? What am I doing wrong? What should I do differently? And most times when we get fundings, especially from government institutions, we assume that, oh, it is free money. No, it isn't free money. Every investor wants his or her money back, even if the investor is your federal government. So, we're seeing it in a nutshell. Once again, we're saying you need to have your business plan, you need to have your projections. Even if you're a startup, you need to see the financials. And if you're not a startup, you need to see your cash flow that you're looking at the past, what you've done in the past. Then you also need to always make provision for collateral. You can't be looking for someone to give you something and you don't have an input at all. You need to have your skin in the game. It is what says, I trust or I believe in this project I'm about to embark upon. Then you also need to look at your debt to income ratio. You don't just shop around financial institutions trying to get loans from everybody available. Then you also look at your customer concentration. Do you do business with just one person? Or do you have multiple streams of income where even if one person defaults today, tomorrow you can still get the money to pay back from another customer? You also need to look at your credit rating. It is something that's funny enough, if you discuss with your financial advisors, you can always get to check your credit record in the credit bureaus that we have currently in this country. Then you also have to be able to back your project. You should be able to back it at any point in time because it's your project. You should believe in it first of all before an investor begins to believe in it alongside you. Then you also need to have business history. That is, if you're not a startup, you also need to have business history. Then you also need to look at the industry, understand your market. Is this where the market is going? You want to take a loan, what are you taking it for? Are you taking a loan for building a POS when people are moving around with e-naira now, or I mean, that's where we are going to, according to the CBN. And then you need to also have a structure in your business. You can't just be one cap fits all kind of entrepreneur. You should be able to have specific specialists for each particular role. Then you should also know your lender. You don't approach the BOI for a personal loan the same way you don't go to your bank to finance things that you should have gone to the BOI for. Then you also need to get your timing right. It is not whenever there is a loan available that you should jump on it. Sometimes you'll be doing more bad than good for your business. Sometimes you don't need the cash flow because depending on your business, if you're holding in too much cash, if you're holding too much, if you have current enough income to carry out the business activities you're carrying out presently, and then you say, oh, there is a loan I can easily access here, let me go access it, so more money for me. No, it's not more money for you. If you're not making money with what you already have, then you're only bringing in because you have to pay interest on every dime that comes into your business as a loan. So these are all what we've looked at today. And for those of you who have indicated, according to the poll showing on your screen now, that you've applied for a loan in the past and been denied, now you know. Which of these things have you been doing the wrong way? Thank you once again. My name is Olakunle Ayodeji, and I will be willing to discuss with you beyond this program. If you do have need for loans, advisory, investments, FundQuest will be willing to open our doors and listen to you. Thank you very much, everybody, for spending your morning with us. We really appreciate and we hope you've enjoyed this session today. Thank you, Mrs. Dele-Oni and Mr. Ayodeji.
Thank you, Kayode.
Wonderful.
Thank you very much, Kayode. Thank you for the
wonderful weekend.
All right.
Yeah, bye.
Bye-bye. Okay.